If you're running a business in Western Europe right now, there's a good chance you're paying somewhere between 40 and 55% in total taxes on your profits. Corporate tax, dividend tax, social contributions, it adds up fast. But what if I told you there's an EU country where the effective rate on your business profits can be as low as 15%? And it's fully legal, fully compliant, with no gray areas. Hey everybody, it's Brianna from Cypro1, where we help entrepreneurs set up and register their companies in Cyprus. And in this video, I'm going to break down exactly why Cyprus has become the #1 destination in Europe for business owners who want to keep more of what they earn without taking any legal risks. Let's start with the reality most European entrepreneurs are living in right now. If you're running a profitable business in countries like Germany, France, Belgium, or the Nordics, you already know the pain. Corporate tax alone can range from 25 to 33%. But that's just the beginning. Once you want to take that money out as a dividend, you're looking at another 25 to 30% on top. Add social contributions, solidarity surcharges, and local taxes, and you can easily end up with a combined tax burden of 50% or more. That means for every euro your business earns, you get to keep less than 50 cents. The result? More and more entrepreneurs are asking a very simple question. Is there a better place to do this? There are a few low tax options in Europe, but most of them come with serious trade-offs. Some jurisdictions have complex refund systems, where the headline rate is high, but you get money back later. Others have low taxes, but no real infrastructure. Or they're on various international watch lists. Cyprus is different. Here's why. First, it's a full EU member state. That means your company operates within the European single market, with access to EU directives, double tax treaties, and a legal framework that international partners and banks trust. Second, the corporate tax rate is 15%. Flat, simple, no refund games. This rate was set in January 2026 to align with the OECD Pillar 2 Global Minimum Tax. It's below the typical EU rate, which is just above 20%, putting Cyprus firmly in the lower tax group of EU jurisdictions. Third, and this is the big one, Cyprus has something called the non-domiciled status, or non-dom. If you qualify, you pay 0% tax on dividends, 0% on interest income, and 0% on capital gains from securities for up to 17 years. And as of 2026, you can now extend that to 27 years. To apply for this non-dom status, I will make a separate video explaining it. So in the end, no other EU country offers anything quite like this combination. Let me walk you through a concrete example so you can see what this actually looks like. Say your Cyprus company makes 1 million euros in profit. Step 1, you pay 15% corporate tax. That's 150,000 euros. You're left with 850,000. Step 2, you take that 850,000 as a dividend. As a non-dom, your dividend tax is 0. The only thing you pay is the GHS healthcare contribution, 2.65%, capped at a maximum of 4,770 euros per year, regardless of how much you earn. So your total tax bill on 1 million euros in profit is roughly 155,000 euros. That's an effective rate of about 15.5%. Compare that to the same million in a high-tax European country, where you'd be looking at 400,000 to 550,000 euros in combined taxes. The difference is massive. And if your business involves software, patents, or other intellectual property, Cyprus has an IP box regime that can bring your effective corporate tax rate down to just 3%. But that's a topic for another video. Now, I know what some of you might be thinking. If the taxes are this low, is Cyprus some kind of tax haven? The answer is no. And this is actually one of the strongest arguments for Cyprus. Cyprus is fully OECD compliant. In January 2026, Cyprus chose to increase the corporate tax rate from 12.5% to 15% because it chose to align with the global minimum tax framework. That tells you something about how this country approaches regulation. They play by the rules. And Cyprus is not on any EU or international blacklists. It's not a gray-listed jurisdiction. This is not some offshore scheme. This is a legitimate, transparent, EU-regulated tax structure. And then there's the lifestyle. I won't spend too long on this because this channel is about business and taxes, but it matters. Cyprus is ranked as the 5th safest country in the world. It has a stable banking system, a well-functioning legal system based on English common law, and a business-friendly regulatory environment. Cyprus has over 320 sunny days a year. The cost of living is significantly lower than Western European capitals. The island has some of the cleanest beaches in Europe. English is widely spoken. And the business community is growing fast. More and more international entrepreneurs are making Cyprus their base. You don't have to sacrifice quality of life to optimize your tax situation. In Cyprus, you can have both. So let's recap. Cyprus offers a 15% corporate tax rate, one of the lowest in the EU. With non-dom status, your dividend tax is 0 for up to 27 years. The effective rate on €1 million in profit is around 15.5%. It's fully OECD compliant, fully EU regulated, and not a tax haven. And you get Mediterranean lifestyle on top. If you're an entrepreneur paying 40 to 50% tax somewhere in Europe right now, this is worth looking into seriously. If you want help setting up your company in Cyprus, reach out to us at cypro.one. We handle everything: company formation, tax residency, the full package. Don't forget to subscribe and hit the notification bell so you don't miss the rest of this series, where I'll break down the Cyprus non-dom status, company setup costs, and much more.